So how do you know when to buy a stock? Because it's one of the worst feelings when you buy a stock and it continues to sell off. So in this video, I'm actually going to talk about the 3 stages of a reversal and the steps that I've taken and how I work with the Learn Plan Profit group and making sure that you stay effective when everyone likes to say, buy the dip. I think that there is a more effective way in how to buy the dip. And that's what I'm going to share with you in this video today. So let's go ahead and jump into my screen. I don't want you to focus on all the mess that I have going on here, right? I want you to focus on what's important. What is a trade and like why do we buy something? Well, we buy something with the intention to be able to sell it for more. And I want to make sure of 3 things. That I put my money in areas that are consistently bullish, meaning indicating signs of an uptrend. The second thing is I need there to be consistency because I trade based off of technical patterns, right? So that means that I have to be able to identify a pattern to choose to take advantage of it. And the last thing is, I don't know about you, but I don't like overpaying. I like to focus on deals. And it's just those 3 principles that I solely choose to focus on. I like to keep things simple. And it's the simple things in life that people tend to overcomplicate, but you and I are not one of them. So let's go ahead and jump into my screen. So this is Facebook. I don't know if you've heard of them, but it is a nearly $1 trillion market cap company. And if I were to ask you, do you think Facebook's going anywhere anytime soon? No, it's a quality, valuable blue chip company. And if you look at Facebook on the day chart, meaning where each candle represents a day, right? This is almost a whole year. If I were to ask you, hey, what do you have bought in Facebook 1 year ago? Just looking at it, well, duh, right? It was trading at $170 and now it's trading at $340. I'd love to double my money. Well, what's one thing that I like or find attractive about Facebook? It's bullish. It indicates signs of an uptrend over a long period of time. The direction is in your favor. One of the biggest mistakes that beginner traders make is they always like buying the dip on a stock that is consistently bearish, meaning that it's selling off. Why would you want to buy the dip on something that is losing money? You just think all of a sudden it's going to recover? That's not how the market works. I'm not here to trade based off of hope. I'm here to trade based off of what makes sense. Have a why behind everything that you do. So let's go ahead and dig into it. The direction is in my favor with Facebook. Check. Is there consistency? Well, yeah, it's consistently bullish and it makes higher highs and higher lows, meaning that over time, Facebook does pull back just like any stock. Pullbacks, you should embrace them. It allows the market to breathe. No one that is well positioned gets scared when the market pulls back because it's, if anything, an opportunity where you can buy more at a cheaper price and ride it back for the recovery. The only people that get upset when the market pulls back are those that were not prepared. And like I said, you and I, we're not those people. We are here to be prepared, not to get scared. So now that Facebook has recently pulled on back, guess what? It meets my 3rd criteria of it being cheap. Now, is it the cheapest stock? Is Facebook a stock that, like AMC that offers like crazy return? Is it a pump and dump or a hyped up stock? No, it's Facebook. It's a good quality company that's bullish over a long period of time, and it makes sense that it's consistently bullish, and that's why I want to put my money behind it because it grows over a period of time. So it meets my 3 criteria of it being cheap, bullish, and consistent. So now should I just blindly buy the dip? Should I just throw $1,000 into it and just cross my fingers? Well, no. There's an effective way in taking advantage of these opportunities. And within our Learn Plan Profit group, we call it the 3 stages of a reversal. I want to give you a real example. When Facebook was trading at highs of 220, as you can see right on over here, and then it pulled back and hit lows of 137, as it was selling off, did it make sense to buy some at 194? Did it make sense to buy some at 175? You don't know where the bottom of a stock is. I'm not here to predict that I can predict the future. I'm not here to pretend that I can predict the future. My apologies, I messed up. But I'm not here to pretend like I have a crystal ball. We can't predict. We can prepare. So as something is selling off, the direction is not in your favor. It's bearish. So this is what we call the rejection stage. And it's a very common mistake that how many times when something sells off, do you buy the dip with 100% of your account? It sucks because guess what? When I go in with $1,000 and I bought the dip and it still sells off, Now I'm just sitting on my hands. It's the worst feeling because all you're doing is now hoping for it to recover. Again, what are we not here to do? Hope. So during the rejection phase, as an absolute beginner, I would either go with 0% to 10% of a position. So an example can be if you have $1,000 in your account, instead of going in with $1,000 right away, either going in with nothing at all because it's still selling off, because it's a very high risk stage, and or 10%, so $100. $100 out of the $1,000. So if it does continue to sell off, well, yeah, it does suck because you might be losing a little bit of money, but only 10% of your account is invested, so you can tolerate it. Put yourself in a position in which you can tolerate. You're not just hopeful because you don't just think that you control the market and that when you buy, the market has to recover. That's not how the market works. You should always be optimistic with the idea that nothing has to happen. The market can continue to sell off. Things don't have to go according to plan, which is why we focus on risk management, a very common mistake that many beginner traders don't. So as we approach this consolidation stage, this is stage 2. This is when the stock is beginning to establish a support level where it's no longer selling off, but it's not really recovering just yet. This is where I would enter with about 10 to 20%. So the example of $1,000, this is where I would be in with either $100 or $200. A real world example of this with Facebook would be when it hit lows of 137. We still didn't know that that was the bottom, but it's beginning to consolidate around this general area. It didn't just recover right away. It begins to consolidate. It establishes a support level, and then it breaks above EMA, and then it begins to indicate signs of an uptrend. This is when it's actually indicating signs of an uptrend. This is the why. Why am I going to buy here? Well, now it's actually recovering. So now my why is, well, I want to put my money in something that's actually recovering. Because guess what? It was bullish, it sold off, it's now recovering. I can get it for a good price, and the direction's in my favor. So this is the third stage, confirmation, where it's actually indicating signs of an uptrend. This is where I can step on the gas with 20 to 100% of my position, and it's viewed as a little bit more of a low risk. It still doesn't have to go according to plan. Anything can happen, as a negative news can be shared, the stock can drop, which is why risk management always has to be top one priority. But you are at least taking steps to approach this buy the dip just concept in a much more conservative way. And that's what I'm here to do, to keep it a little bit more simple and to make sense of things, right? That you don't have to do everything blind, or you don't have to do everything with a hopeful mentality, but that you have a why behind something. And that's exactly why I'm making this video, right? I want you to understand the reason why someone does what they do, which is, I think, one of the biggest reasons that our live trading sessions are so of value. During these live trading sessions, how cool would it be where you can watch me trade live every morning at market open and see why I buy a stock, why I sell a stock, why I cut losses, and see it in real time. It's not a recorded video you see an hour later, a week later, or you message me and then I message you back a little bit later. It's real time. And at least with the market's always changing, and real-time value is always the most valuable. And that's what I will actually want you to see in the next video. I want you to see what it's like to watch someone trade live. So only one last video, and it's a live trading video. If you're excited for that, make sure you drop a thumbs up and move on to video number 3. I hope you enjoy.